Alright, hello YouTube, it's Faceless Man here, and today is class number 3. Now I'm going to be talking about a stock that I would recommend you guys buying if you're a new investor, and I'm going to show you how to do the math on your returns. So, before I start that, I just want to talk about the stock market. You see the stock market has been crazy this past week. I would say it's not a good time to invest. Just remember, after an election, stocks usually tend to blow up, but that doesn't mean they're stable. They're not stable. So, you have to stop, following the trend. This was a huge jump here. So, again, we're in a high point right now, and it's not a good time to invest. The best time I would say you have to invest, if you already missed this part, like I said, you guys should invest now before the election, but you already missed that. Don't feel bad. The stocks are going to come back down on December 31st. Usually they do. So, yeah, before a new year, stocks come down. That's a good time to buy. Go back in. So just pay attention throughout the time. Again, you haven't missed out completely yet, but you did miss out in a good little chunk. So jump back to this. Let's go back. I'm going to show you a good stock that I recommend. Let's say you're a new investor. You want to invest $100. Let's say you're just going to invest those $100, nothing else. You're just like, okay, instead of having it in my savings, I'll just dump $100 in this stock and let's see what you get as a return. So you get AT&T. So let's say AT&T is at $28.60. So let's say you want to invest $100, right? So you put $100, you divide it by 28.60. So what does that equal? That equals 3.50. So it's 3.5 shares. That's what you're going to be getting for $100. You're going to be getting 3.5 shares of AT&T. Now, with that, AT&T pays a dividend of 52 cents every 3 months, which is quarterly. So every 3 months, they're going to pay you 52 cents per share. So then you get this number and you multiply it by 0.52. You're going to get $1.81. So for these $100, every 3 months, AT&T is going to pay you an interest of 1.81 cents. So then you multiply that by 4 because there are 4 quarters in a year. And then you multiply that by 4, which means you'll be getting $7.27 per year by having $100 in AT&T. Now, what you can do is reinvest that. So you could just keep reinvesting. Next time you're going to have, those $7.30 more of shares. And let's say you don't touch it. Within, what is it? 1, 2, 3, 4. Within 4 years, it's going to buy a stock of its own. So that's the way you should see it. It's like next time you're going to have $28 in 4 years. And then in another year, you're going to have slightly more. And it's going to keep accumulating. And that's something you want to do. If you're a new investor, that's what you need to see. AT&T is a good stock to invest in because it's fairly cheap. You can buy a bunch of them and you can, accumulate quickly. So again, AT&T is something you should look at. If you only have a little bit of money, check this stock out. They've been increasing their dividends yearly, so the dividends are going to keep increasing. If you can only invest $10 a month, then every 2 months you could buy another stock of AT&T. And like that is going to keep accumulating and you're going to see your interest compound. So that's just something I quickly wanted to show you guys. A quick way to show you how to do the math. The good thing about AT&T, as you can see, it has a good dividend yield, which is 7.35. The payout ratio is 18.64, which is really good. Payout ratio, the lower the number is, the better. If it's over 40%, then that's where there's a worry in the stock. So if you see the PE ratio, if it's above 40%, that's where it's risky. The market cap is 204.73 billion, which is really good. As you see, don't pay attention to none of this stuff that it tells you to buy, sell, all that stuff. They're constantly changing that. They're not accurate with that stuff, so just don't pay attention to that. The thing you need to pay attention to is the quarterly earnings too. Try to listen to their earnings calls, see what is working for them, what isn't. But as you see, they've been coming down. But again, the payout ratio hasn't been bad, so that means they're going to be sticking with their dividends. So they're not scarce. I mean, they're not doing good, but they ain't doing bad either. So again, check AT&T out, especially if you're an investor. If you want to check out other stocks, that's a good way to actually do the math on it, and you can see what your returns will be. So, I mean, that's pretty much all I wanted to talk about. I know it was a short class. There's been a lot going on in the stock market, and I've been making a crack ton of money. I've been going crazy, so that's why I haven't been posting a lot of videos. But if you guys like the class, if you have any questions, feel free to leave down in the comments below or send me a personal message. I will get back to you as quickly as I can. And, if you disagree with me on some things, just leave a comment down below and we can talk about it. And yeah, that's about it. If you guys like the video, please like, share, and subscribe. Share the video to some of your friends that are trying to get into the stock market. Show them my classes. Hopefully it helps them out. Just the best thing you can do is share my video, guys. But again, like, comment, all that good stuff, guys. I hope to help you guys out as much as possible. But then, I hope you can succeed on your own too. So again, thank you for everything, and I will see you guys next time.